So this is the world that these regulators live in. Like, Bitcoin is happening all around them, and they're not robots. Like, they don't want to be uncool. They don't want to be the one that is the old crocodile that stops innovation when everyone around them is like, hey, when are you going to approve this? What's going on? It's been 10 years that people have been clamoring for a Bitcoin ETF.
Tuur, welcome back to the show.
Thanks for having me, Stephan. Great to be back.
Yeah, lots of things going on. So as we speak, we are basically, I think we're on the eve of the spot Bitcoin ETF approval. So just we're recording this Dubai time, 8:11 p.m., January the 10th. And so, let's just kind of get your overall thoughts. I mean, let's start with this. Do you believe that we're changing eras in Bitcoin now?
I do think so. Yeah, I do think so. And this ETF thing, like, I think you can look at it both ways, two ways, and then I think both of them are okay to embrace at the same time. One is that this is a watershed moment for adoption, because all of a sudden everybody who has a brokerage account has instant access to the asset, and we have an army of advisors, financial advisors, who can now recommend Bitcoin and earn a commission doing so. And then additionally, we have, of course, the Wall Street giants who are going to put the shoulders behind marketing this thing. So finally, they get to also take part in the profit making of this industry. So that's kind of the adoption story, the good one. And then the more concerning one, that the worries that people have is that, we are now having financial products that are siloing Bitcoin, where the government has pretty much full control. Like, if the government wants to freeze the assets that are backing the ETFs, they can do so. Of course, they wouldn't do that today, but, what if there's a big crisis, where there's a big war breaking out and they need funds? Then that could be used. So I think those concerns are valid, and at the same time, it doesn't prevent me from being elated, because I think that the public at large is not ready to understand all the consequences of this story, and yes, they will get burnt by Bitcoin ETFs, similarly to how a lot of people got burned by shitcoins and other just shenanigans in the crypto space. This is just another step of the maturation process. People are going to have to learn that there is a difference between wrapped Bitcoin or Bitcoin ETFs and owning the real asset in a multi-sig or a collaborative environment. And we'll be able to, we'll see what happens. And of course, the scale of this thing is pretty large. Like, we may see up to, who knows, 500,000 Bitcoin. I don't know. Is a million? I'm curious about your thoughts. Like, how many Bitcoin are going to get owned by these ETF structures? But still, it's not a majority of the Bitcoin. It's still kind of a small slice of all the Bitcoins that are around. And so it'll be another learning process. Like, people back in the day trusted Mt. Gox with, I think it was 7% of all the Bitcoin. That was a bad idea. But, we moved on. We learned.
Right. I think you make a lot of good points there. So let's start with the Wall Street can now profit from this. They can actually come to the table a little bit where previously they couldn't. And I think it's an interesting story, because for the first, let's say, 15 years of Bitcoin's life, it was more accessible to retail and, let's say, maybe high net worth individuals than to these big institutions, for various reasons, because of the custody, the legal aspects, the regulatory, the accounting, various reasons. Retail and just everyday hodlers like you and I, we had a chance to front run. And I think the other interesting point that you touched on is this idea that Wall Street and their distribution mechanisms now are going to come to play, right? Because there are these products, right? BlackRock and Fidelity and all the, Galaxy and all, Bitwise and VanEck and all these other ETF providers, and Grayscale, of course, are now going to have a product that they can put out there in the market. And then financial advisors, so particularly people like Fidelity, who have this big distribution angle, that they can now leverage that to sell these products. And the ETF market, just for context for listeners, I believe last I checked the stats, it's around $10 trillion. That's just ETFs in general, right? Now, as we speak today, the market for Bitcoin is, call it $850 to $900 billion. It's some tiny, tiny fraction, right?
Yeah, I mean, it's an ocean, right? It's an ocean of money that all of a sudden Bitcoin has access to, that's Bitcoin is being plugged into. So yeah, I mean, it's hard to not be excited as a Bitcoiner that all the, like you're saying, all these roadblocks have been gradually removed. And it's also actually pretty exciting to me that so many different ETFs are likely going to be approved at the same time, because that allows for some arbitrage. Maybe like some of the worst players are not going to get as rewarded by the market. I don't want to rosify the picture too much, but at least I think that's good.
Right. And so let's talk a little bit about the siloing effect that you mentioned. So let's talk a little bit about what the actual risks could be theoretically. Could it be that, okay, as an example, many of the current, prospective Bitcoin ETF providers are using Coinbase as their custodian, with the exception notably of Fidelity, who are doing Fidelity's own self-custody because they have their own professional custodian team.
Isn't there one that chooses Gemini too?
Oh, perhaps, yeah. I think you're probably right. But it's like most of them are using Coinbase custody. And so I guess that's going to be a question in the future. Like, if there's a lot of the coins that end up with one entity, does that present some kind of centralization? Does it present some kind of risk at the systemic level, or not really?
No, absolutely. Because what happens in times of crisis, and I've said this many times before, is that governments will go after the low-hanging fruit. They will just take whatever's there and that's easily available. And I've given this example before, but in World War II, the government needed sugar to send to the soldiers, and so they just went to Coca-Cola and grabbed it. It's just the way it is, and so I don't see why they wouldn't do the same with a bunch of money that's, like, in their minds just laying around there. And then of course there's the other route, which is just like in the free banking era, we see some bad actors going bankrupt, but those bad actors happen to have political ties, and they kind of talk the government into pooling the money together to make a big insurance pool, a federal reserve, so to speak. That's exactly where the word comes from, to then insure the whole Bitcoin banking system. So I think that, situations like this where a lot of Bitcoin is pooled together in one place could inspire the government to think in that direction. And honestly, I think they will try. Eventually, I think they will try. But the difference between a gold standard and Bitcoin is that it is so much easier for people to store their own Bitcoin and to verify everything than it is for people to store their own gold. Plus, it's so much easier for institutions to get involved because with multi-sig and these time delays and all these intricate mechanisms, you're much less exposed to the direct threat of violence. Like, if you are just one signer in a 3 out of 5 configuration and the other 4 signers are abroad, then even if you live in a country with a very powerful mafia, whatever, they can't really extract the money from you. So there's very powerful mechanisms that will allow for this existing decentralized system to continue growing, even in the face of governments trying to re-centralize it all.
As you say, governments can get very grabby, and the US government, last I checked, has a deficit. The federal government has a deficit of $34 trillion about. And that's not even counting the unfunded liabilities, which is multiples of that again. And so it's probably easy to imagine a scenario where maybe 10 years down the line, there are politicians who are saying, hey, that's a nice little pot of funds there. Let me try to seize that. But here's the other question. Would it be a systemic risk to Bitcoin, or would it be a risk to those individuals who believe they have Bitcoin ETF? Right? Like the individuals who've purchased that Bitcoin ETF, and that really the rest of the network is basically just going to operate unchanged?
I think asking that question is answering it, because we know the precedent of Mt. Gox. Nobody who had Bitcoin outside of Mt. Gox really had to worry once Mt. Gox went down. The only thing that did happen is a lot of no-coiners, people that don't know much, they were like, oh, Bitcoin just went bankrupt, or, the CEO of Bitcoin is going to jail. Like, well, that's just a story. So there is a temporary kind of a PR story that puts Bitcoin in a bit of a bad light, but that all gets ironed out. So it's really, it would just be another lesson for people in the world to learn how this new financial system really works.
Yeah, that's a fair point. And I do wonder whether if the other angle that people talk about is this, let's say, a contentious fork example, where maybe if there's a lot of coins with one particular holder, that maybe they have a way to try to influence the outcome of that fork because they have a lot of coins. They can sort of sell the side that they don't like. Maybe is there a potential angle there also?
I don't really see it, because I think that, yes, governments are going to control some amount of the Bitcoin, but it's hard for me to conceive that they would ever control, I don't know, more than 30-40% of the world's supply. Like, I'm throwing a number out there, but that seems really high, those kind of numbers. I think it'd be more likely to have maybe like 10%, 15%, because government, they just love spending. Like, they don't really love saving. They usually go in debt rather than that they build up a big reserve. And then so, yeah, temporarily they could sway the price, like kind of how central banks have tried to do with gold. Like they kind of sell into the bear and try to keep that selling pressure on to prop up whatever else that they want to promote. But that eventually turns against them. It's just a temporary thing. And it just means more cheap coins for people who understand what's actually happening.
Right. And
also, after they play that card, there's no more Bitcoin to sell. So it's kind of checkmating themselves.
Right. It's like a one-time power that you get, right? Because once you've sold those coins, it's very difficult to actually get them back. And so the other element is around how many coins are held in custody. Now, there are different statistics people share, and some people sort of share, some like Glassnode statistics and things like this to say this is how many coins are left on the exchanges. But perhaps that is excluding some of the coins that are not on exchanges, but perhaps held with a custodian, right? So maybe there are, let's say, large entities who today either do not have the legal ability the regulatory ability, or perhaps some kind of technical capability. They don't want to self-custody. And because of that, they're keeping their coins with some custodian. So then it sort of brings up that point again of like, I don't know how many people are held with custodians. So yeah, I'm curious what you see there. Do you think it's a similar answer there, that basically there's not that many people in that camp, and that really a lot of the coins are held by people out there who are holding their own coins?
Yeah, that I'm not that worried about that either, because it's true. It's possibly a larger amount, but then you're talking about a bunch of custodians spread over various jurisdictions. And, usually the turnaround time, even if your Bitcoins are stored in deep cold storage, I don't know, I would say in about a week, you can get all your Bitcoins out. And so as soon as some kind of trend starts to happen, where like, oh, look, the government just went after Coinbase, then people just pick up their phones and call their broker and be like, hey, or their exchange and be like, hey, I want to move this. Or, so far you guys have held 3 out of 5 keys. Well, I would like to keep one more, actually, because I feel safer if it's fully in my control and you guys just have a minority control of the keys. So that's the beauty of this, these multi-sig arrangements, is that you don't even need to upend the way you really operate, especially if you're an institution. You can just kind of, and you can build that in as a contingency plan, which you should. I'm sure like a MicroStrategy has contingency plans for what if, this current setup gets compromised. What is the next step? How do we move things? So it's all a learning process, and it's kind of like, I don't know, like it's happened so many times in history where you need to see some kind of disaster happen to realize like, oh my God, this is a real risk. So let's kind of beef up our security protocols.
Right. And even today, there could be large entities who maybe they split their custody across multiple different providers as well to sort of diversify that risk as well. And I know even some of the large custodian companies have already been talking about this for years, that they would try to have keys in different jurisdictions as well. So that's like another way that even the custodian companies are trying to sort of protect themselves in this way.
Yeah, and the way I see the future is really that we won't really have custodians per se having so much power, but it'll be more, there'll be trusted key holders, and they're kind of like, I don't know, like the Knights Templar or something. Like they have a reputation of honesty, and then they will be trusted with a key or a few keys, but not necessarily with the majority of keys to be able to move coins around.
Yeah. And one other thing I've really admired in your ability is you've had a great sense of where we are in the market, right? Now, we're going to talk a little bit about some of your reports that you've written. So the recent one you've written, now this was from April 2023. It's called How to Position for the Bitcoin Boom. Now, the interesting thing for listeners who don't know who Tuur is, Tuur has been around for a while, and he's been writing reports, and the interesting thing that you've done is you've been able to sort of call the bottom, or at least write the report that sort of told people, hey, now's a good time to sort of get back into it. So I'm curious if you have any reflections on that just over your years in Bitcoin. Correct me if I'm wrong, I believe you've been writing about Bitcoin and talking about Bitcoin since around 2012, right?
2011, but that was in Dutch, and then in 2012 I started writing in English about it. But yeah, I ideally, this is kind of my vanity pitch. Like, ideally, I try to publish my reports not exactly at the bottom, because then literally nobody's interested. But like, as you're coming off the bottom, I kind of want to encourage the early people that are like, oh, maybe, you know, this is coming back, to kind of, and also myself, of course, I want to, but if I'm give you the real honest pitch, it's usually frustration builds up during the bear market. There's so much FUD, people saying Bitcoin is dead. Like, eventually it just kind of gets on my nerves, and I start digging into, all right, like let's go back to the fundamentals. And that's actually the more real reason why I put out these reports during the bear market. Because during the bull, it's the same. Like, especially when there's when there is euphoria, people don't listen. So kind of there's that sweet spot somewhere in the bear market where you can actually catch the attention of a few people. And then, of course, it's nice, to have a track record of calling the bottom. But yeah, I put it out at $26,000 Bitcoin back in April. And sorry, my dog is getting ready for a nap. He's digging into the pillow.
Gotcha. Yeah, so you published that report April 2023. And I mean, there are a few key points you were talking about, but I think one of the ideas is looking at what the whales are doing, basically. Mm-hmm. What are the large holders doing? And, we look at this, obviously, Unchained Capital has this whole HODL waves aspect. I believe it was Dhruv Bansal who came out with that, and I believe that was piggybacking off some earlier work. I believe it was John Ratcliffe.
Yeah, back in 2013. Back in 2013, John Ratcliffe... Indeed, it was only later called HODL waves, but he found a way to show how many Bitcoin are only 1 year old, how many Bitcoin are between 1 and 3 years old, and so you could actually start understanding this market psychology through that.
Right, and then what's happened now is it's kind of become a very professionalized industry, because that was maybe the early days. You had John Ratcliffe, people like Dhruv Bansal, and the late Thomas Blumer, who was also talking about some of these analytics. And nowadays you have the likes of Glassnode and people like that who are sort of have really sort of advanced that science a little bit, even further. But let's hear it from your perspective. Why does it matter what these whales are doing? How does that help us? Like, let's think of this from a cycle analysis perspective. How do you sort of use that insight to understand where we are in the cycle?
Yeah. Well, it harkens back to the idea that if you can understand what the insiders are doing of any sector, any particular stock, any asset class, then you basically have an edge, because they have an edge. They've been in the market for a long time. They own a lot of it. They're very personally invested. So there's an honesty that comes with that. And they might not even be talking about it. They might not even be on Twitter, but if you can see what they're doing, then that's very valuable. And so we have the blockchain. And so That's why Tomas was so intrigued by blockchain analysis, and he came up with this metric called HODLer net position change, which is basically it looks at not just large holders, but it actually looks at holders that have a lot of Bitcoin that they've held for a long time. Like that's the definition of a whale, rather than someone who trading into Bitcoin, they might sell in a month from now. That's very different. And so you can see that, where are the large pools of Bitcoin that have been around for a long time. And then you can aggregate it all. Like you look at literally the age of every single Bitcoin on the blockchain. And then you see these trends where sometimes a lot of old coins start moving into the market. And that is rare. That doesn't happen a lot. And consistently what you see is that actually these old coins start moving when the markets are overheated, because that is the whales who are calling bluff and saying, look, there's just too many weak hands in the market, too many people who have no idea what Bitcoin is. I'm going to actually sell some Bitcoin, and then maybe get back in later. So this is a metric I really love. And what you want to look at is, okay, what's happening now? And, basically you want to make sure that we're still in a quiet period, because that means that we're not at that exuberance period where the whales are calling bluff. And yeah, the last year, there's just, even though the price has moved a lot, the whales are just sitting tight because they believe Bitcoin is still massively undervalued. That's my interpretation.
Right. And so maybe we're doing a little bit of psychologizing or trying to get into their heads a little bit, but it could be that when we see these very rapid price rises, right? Like when Bitcoin did that run in 2017, it went from like 1K up to 20K over the course of 2016 and 2017, right? In that period, because it had just rapidly, basically done a 20x, you probably saw that there were a lot of people, let's say, taking some coins off, right? Maybe they were like, okay, I've hit a level that I can buy a house or buy a yacht or buy a Lambo or something like this. Or like you said, maybe they think, hey, I'm going to sell some Bitcoin there at the top, what they believe is a top, and they maybe were able to repurchase at the bottom or relatively lower prices. Would you say that's a way to psychologize, or at least try to get into their heads of what they're thinking?
Yeah, no, exactly. Like, I mean, if you're a massive whale, you have 10,000 Bitcoin, you split them up into, parts of maybe 1,000 Bitcoin each, even if you want to sell only 50 Bitcoin, you have to move that balance of 1,000 Bitcoin to do that. So that will just show up. And there's this counter argument that people have used. It's like, oh, but technically you don't know. You only know the coins are moving. They could be self-dealing. They could be moving it to one of their own wallets. But Tomas's point about that was that yes, but they are still touching the Bitcoin, which means that they in that moment they took them out of cold storage, and really they could sell, and very likely they're just considering that they like might sell or not, but that kind of behavior is significant if it happens in the aggregate. If a lot of old coiners are having that behavior at the same time, it's still a very valuable signal.
Yeah. And so, I mean, there are some small counter arguments you can make, but I think we would say they are much smaller as a factor. So as an example, it could also be that, look, Bitcoin has just gone up so much that this whale or larger hodler is thinking, hey, I need to increase my security. I need to move my coins out of this setup into a higher grade multisig, as an example. And maybe that is going to be what looks on chain, oh, look, all these coins are moving. But I guess we would argue, or we would say, that's actually a small fraction of the reason why. Most of the people who are moving a large amount of coin are doing it because, like you said, they want to maybe take some off the table, they want to sell, they want to buy a house or whatever. That's generally the reason why many of those whales might be selling some or spending.
Yeah, I mean, I feel, to me, I'm a little doubtful that would be the reason, because if you're a whale and your cost basis is so low, you have so much opportunity to beef up your security. You have the entire bear market. You have the early bull market. Like if you're very exposed to Bitcoin, you pay attention to the price. You see like, oh, we're up 50, 100% in a short amount of time. So why would you wait until all the way of extreme exuberance to beef up your security? Also, it's the wrong time, because then all the industry professionals are very, very busy, right? Because there's so much demand. Everyone is it's hard to get people on the phone, etc. Anyway, so I would just don't really see the reason why exactly at the exuberance phase they would want to do that, in the aggregate at least.
Yeah, right. And so continuing on with our idea of cycle analysis, or at least trying to have a rough idea of where we are, as you pointed out, I think just recently you were saying there have been very weak pullbacks so far, right? And to you, that was an indicator that this is early in the bull run. So could you just elaborate a little bit on that? What's going on there in people's minds?
It was Checkmatey, who's I believe the CTO at Glassnode, who tweeted this out, and I noticed that indeed the drawbacks. So you can make a chart where every time Bitcoin declines by a certain percentage, you just show it on the chart, only the decline in percentage terms. So if you have a bunch of drawbacks of 5%, there'll be like little notches. And then if you have 20%, there's like a bigger spike down. And so you can map out the entire history of Bitcoin in that way. And what we've been seeing in the last year is that, yeah, there's been some drawbacks, but they're actually very small compared to previous bull markets. And the question is like, yeah, what does that mean? I think it's similar to 2015, 16, where there was so much undervaluation that there's actually so much reluctance to sell early in the market, because all the leverage has been squeezed out of the market in the prior boom. All the weak hands have left pretty much. And so if there's new money coming in, every dip gets bought pretty much. And I think that's explaining why we haven't seen more dramatic pullbacks, because people always talk about the wall of worry. If you're in that like sustained bull market, it never goes up in a straight line. You have these like big 20-30% corrections. I think those are coming, but it's very encouraging to me that the pullbacks have been so light, so superficial. It's telling me this is still very early in the bull market.
I see. And I'm curious your view then. Would you say the 2020 and 2021 bull run was a little muted in comparison to past bull runs like 2013 and 2017?
Muted. I think there was more confusion. Like, in a way, Bitcoin got caught up in this wave of YOLO, you only live once, and FOMO, fear of missing out. Remember, that was the time of Wall Street bets was really big. People were literally gambling with money. There was just so much new stimulus that had come into the market that it created this drunkenness in the economy. I remember housing went crazy as well in 2021. NFTs, like people started, it's like, Beanie Babies on steroids. So, in that market, of course, Bitcoin is going to go up, but it didn't receive the pure investment that it's receiving right now, which is spot on. It's like, I'm afraid of inflation. I'm afraid of bankruptcies. I'm afraid of bank runs. I'm afraid of an energy crisis. I'm afraid of political instability, of maybe having to leave my country. I'm afraid of war. Like, these are all the proper reasons to buy Bitcoin. I feel them now. This is why people are ignoring, to a large extent, the crypto casino, because they realize Bitcoin is actually representing that safe haven. So
the other angle that might be interesting here is, we talk about, quote unquote, the DCA army, right? Like this kind of, it's a colloquial term, but basically these people who just accumulate Bitcoin, right? Now, many of us have been stacking Bitcoin, and, it's an accumulation game. You're just trying to accumulate Bitcoin, right? And so whether you are, doing most of your commerce in fiat, but you're just having a savings in Bitcoin, or whether you actually live on Bitcoin, but you just try to make sure you earn more than you spend in Bitcoin terms, right? That's kind of, generally speaking, those people are kind of in the DCA army camp. Do you think there's going to be a lot more people who join this proverbial or colloquial DCA army, right? Now that we have these ETFs, it could also be argued that there's now going to be more passive flows, right? Because a lot of the wealth is held by boomers, and a lot of boomers are investing in these kinds of ETFs and things. And so they may make a strategic allocation, whether for them it's a smaller amount, maybe it's 1%, 5%, 10%. And, people who just have new income, they're just going to be stacking passively into Bitcoin. Now, of course, we would prefer that, people are stacking their own coins, but there will be people who are stacking the ETF, and that's going to also have this upwards effect on the price.
Yeah, I think that's possible. My gut is that it's a little bit going to be, it's going to be the corporations a little bit more. Like it's going to be treasury management, corporations that have pension plans and things like that, they're going to DCA into Bitcoin, because they're starting to worry about how much money they will have left to actually give these benefits to their retired, employee force, or to go to health insurance and things like that. I think a lot of people in this economy especially are kind of living hand to mouth. Like they don't have much left to save. So I think that it's more likely to be on the corporate level now, where the regulatory stuff is ironed out, the compliance stuff is getting more and more clear, and we have these giant institutions that endorse it. So I think entrepreneurs are going to feel safer to build up some exposure to Bitcoin. Of course I encourage anyone who can to be part of the DCA army. The only challenge is that if you DCA into the ETF and the fee structure changes, or you want to switch from one ETF to the other, and they're both Bitcoin ETFs, if you live in a country that has capital gains tax, that's a tax event, a taxable event. Whereas if you DCA straight into Bitcoin and later you want to switch provider, later you want to switch custodian, or host it yourself, there is no taxable event there. So that's really something to keep in mind.
Back to the show with Tuur in a moment. The lead sponsor of this show is Swan.com, a leading Bitcoin-only financial services brand. Over at Swan.com, or using the Swan mobile apps, you can buy Bitcoin and learn about Bitcoin. You can take an initial lump sum at purchase of Bitcoin, or you can set up an automated recurring purchase plan. Now, most people start with one and then proceed with the other, and then this is a way to regularly accumulate Bitcoin. Now, Swan wants you to self-custody. Swan makes it easy for you to do this with free automated withdrawals into your own Bitcoin wallet. So that's a great step for everybody to take. And Swan has a range of different service lines, whether you are just an everyday person stacking sats and acquiring some Bitcoin in this new era of Bitcoin, or you are a high net worth individual. And if you need personalized service with additional guidance and somebody that you can call as a concierge, there is Swan Private. Now, for that, you can go to swanprivate.com. Swan Private also has support for corporate accounts, trust accounts, and retirement accounts. Also, there is a range of educational material that the team at Swan makes available, from various podcasts and shows to free books, as well as the Swan Bitcoin Canon. There's just so much there, so make sure you're checking that out over at swan.com/Livera to get $10 of Bitcoin dropped into your account when you start stacking with Swan. This show also brought to you by CoinKite.com. At CoinKite, they are a hardware provider for Bitcoin security devices. So notably, the Cold Card is the most well-known device they have. I use the Cold Card in various setups. I have multiple Cold Cards, and it's a really great device. It's very reliable. It uses PSBT as a standard. You can use micro SD cards to move transactions back and forth. You can also directly plug it into a computer. So if you are a beginner, don't be afraid. You can get a Cold Card and get a USB-C cable and plug it into your computer. Use it with software such as Sparrow Wallet or Spectre Desktop or Electrum. And with the Cold Card, you really have a range of security options that you can use. You can use it in standard single signature mode. You can use it with a passphrase. You can use BIP85 to create child seeds. You can use Seed XOR to give yourself some redundancy and potentially extra security. Or of course, if you're an intermediate or an advanced user, you might want to look at using multi-sig with your Cold Card. The Cold Card is such a great device. I think everybody ends up learning a lot about Bitcoin in the process of using their Cold Card, just because of some of the aspects that are involved when you're using a PSBT, rather an air-gapped transaction. So make sure you go to coinkite.com and use code Livera to get your cold cards. And one last thing, for those of you, anyone out there who is a rockstar web designer and developer, make sure you are going over to coinkite.com/careers. The CoinKite team are hiring. So make sure you go and find that out over at coinkite.com/careers. And lastly, Mempool.space. Mempool.space is the leading Bitcoin and blockchain visualizer. You can use this to search and see what is going on the chain. And you can also use this to target the fee for your transactions that you're doing on-chain. I use it all the time when I'm about to send an on-chain transaction, and I just like to use the site to check what's going on, to see what the state of the mempool is. Now, the Mempool.space has various components to it. You can see transactions that have not yet confirmed, and you can also search historical transactions and see information about those transactions. So that can be really handy because you can see all kinds of information, whether things like RBF were flagged or RBF history replaced by fee history. You can see a range of information there. They also have the mempool goggles, which is the latest feature they've implemented, which gives you insight into what's going on into the blocks, whether these are multi-sig transactions or single signature or inscriptions or something else. You can find out all of this stuff there over at Mempool.space. Now, they also have a transaction accelerator program, which is coming out soon. Make sure you sign up for the waitlist. That is over at Mempool.space/accelerator. So go and sign up for the waitlist at Mempool.space/accelerator. And now, back to the show with Tuur. Yeah, very important point to consider. And as you point out, just with corporations stacking, I think Michael Saylor and MicroStrategy have been very emblematic for that. I think he's obviously out there running events called Bitcoin for Corporations and trying to help encourage that. And we know there have been changes at the accounting standards level at FASB in the US, changing the intangible assets accounting standard to allow revaluation upwards in the case where Bitcoin rises. So that's going to be another positive factor for larger public companies who have to abide by these accounting standards, where maybe previously they may have been a little bit skittish or a bit wary of buying Bitcoin because they might be worried, well, hey, if I buy Bitcoin and it tanks, now I've got to write that into my income statement. And that's going to look bad for me when it comes to results time every quarter, because I look bad. I look like I've lost all this money, but I don't get the upside. I don't get to write it up when Bitcoin goes up. Whereas now, my high-level understanding of that FASB accounting change is that, yeah, this new change is coming, I believe, December this year, for companies who want to opt into that standard. And so that's a great thing that will hopefully ease the entry pathway for companies as well.
Absolutely. It's like common sense has been restored. Like the way you would imagine accounting should happen, like finally that's starting to be possible. So one other aspect one other area, this is more of a meme, but I'm curious to get your thoughts on this. So people have been talking about this idea of 3 green, 1 red, right? Now, for listeners who aren't familiar, basically this is looking at just the yearly candle, right? Just January 1 to December 31, was Bitcoin up or down over that time period? And funnily enough, if you look back, 10 years or whatever, you basically get this funny pattern, and it's almost too simple to be true, right? It's just, you see 3 up years and then 1 red, 1 down year. So I'm curious, your view, Tuur, can it really be that simple? 3 green, 1 red. Bitcoin's wheel of fortune. The wheel keeps turning. I don't think it's that simple. I mean, I do think, I sympathize, I think it's true that it basically is saying Bitcoin is cyclical. But I think there's some luck involved with the way the year works and, the timing. I actually think that this cycle should probably accelerate, like as fiat declines. I think the Bitcoin cycles should probably get shorter for a while. It's hard to know. Like maybe we'll have certain types of things that will shorten seasonality, but then in some other respects we'll have like more longer cycles, because you would think a more stable market should have, like gold. Gold had very long cycles, some of which were just caused by supply. Like all of a sudden there was a new discovery of gold, and then a lot of new gold flooded into the global market, and that caused the value of gold to go down. So But yeah, this is really a sentiment-driven cycle that we've been in so far, just pure, pretty much pure psychology. And so I think that as adoption accelerates, then this cycle should probably also accelerate. Just like, remember those spikes when you look at the graph of the amount of Weimar marks that you had to pay for $1, like that was super spiky. I just feel like as the chaos increases, the speed of these cycles should also increase, and the length of the bear market should shorten.
Interesting. So you believe that it may not necessarily be a 4-year cycle going forward, that cycles could, let's say, shorten. Yeah,
we might have like similar to, I remember in 2013 there was this like big run up, and we went to, I think it was like $270 or $170. And
yeah, it's about 260. Yeah,
260. Yeah, and then we went down again. There were people who were like, "Oh yeah, I guess we just had the full cycle, and now we're in a bear market." But actually, there was just a lull, and then we went to 1,200 in early 2014. So I think similarly, we might have a big run up, and then people think like, "Oh, I guess this is it. We're down 30%. Let's get out," and then that's a trap, and Bitcoin keeps going.
Yeah, and that can be concerning if somebody's trying to sort of play the cycle aspect of it. So I guess that's the other question. Should people even try? I mean, ultimately, if you just have this long-term thesis, people would say, hey, you're trying to pick up pennies in front of the steamroller here. Like, don't even try to do that. Just accumulate. And okay, perhaps if you have to take some off to feed your family or whatever, okay, that's one thing, but it's not a question of trying to sort of time tops or bottoms.
Yeah, I mean, this starts to go into, I remember in your notes you wrote down life insurance, but it kind of goes into that area, because as you build up an exposure to Bitcoin, then what you can do is start managing the timing of your sales, and you can build in a bit of a cushion by, if you borrow a bit against your stack, and you incur that debt when Bitcoin is relatively low, and then once you think we are topping out or something, well, then you take a little bit off the top to pay back the debt, and so on. And so that means that rather than having to have a cash reserve, like a fiat reserve to take care of unexpected expenses, you have a capital buffer that's just collateral. And so it's similar with life insurance. You build up a cash value in your policy, and then historically people would do this. You would borrow against your policy if you need to, like that, rather than relying on the government, because that's the big deal nowadays, right? We live in a fiat system, welfare system, where people's unexpected expenses are covered by government, by just printing more money. And that's going away. Like, the fiat system is going down the drain. We're not going to be able to do that anymore. Look at a place like Argentina. Like, yeah, there is a lot of welfare, but it's basically totally unreliable. And so what people need to do is find an alternative way to insure themselves against unexpected events. And one of those events is death. But if you build up a buffer of capital, you can then also start to use small amounts of debt to serve as a buffer.
Yeah, interesting. And as you mentioned with life insurance, this is also a bit of a debate from what you might hear different financial advisors say. So in the sort of normal financial advisors and planners world, they might say, oh, don't do whole life insurance, do the term insurance and invest the difference, right? That's typically what they might argue. And there are others like Austrians such as Bob Murphy who talk about the infinite banking concept. And so that was kind of, a life insurance concept, as you mentioned, this kind of idea of having a whole life insurance policy that you could borrow against or take some cash value out of to pay for things, and you treat it like this asset. Now, of course, I think we would argue in the Bitcoin world, you use Bitcoin as your savings as opposed to putting so much of that trust into a life insurance company. But I'm curious, do you see a sort of emerging of these worlds of life insurance and of Bitcoin? And in that world, how would life insurers get returns to pay out? Like, do you believe that would be like post-hyper Bitcoinization? There'll be these insurance companies who have to, invest Bitcoins and need those Bitcoins to be able to pay out to their policyholders. Is that how you view it, or do you view it a different way?
Yeah, well, I think first of all, you're right. The current world of life insurance companies is very, very far away from our world as Bitcoiners. Very, very far away. It's very arcane, lots of bureaucracy, lots of rules, very top down as well. Like as a policyholder, like you don't really have any influence. But if you look at how life insurance companies historically were founded, it was very much a bottom-up project. It was very much people getting together, pooling their assets, deciding on policy. That's why they would call them mutuals. It was like we mutually take care of each other, and the overhead actually could be pretty light because ultimately you're not a hedge fund. You're not like, going in and hiring quants and everything. It's a very simple operation. And especially I think in Bitcoin, which is not just a bit deflationary like gold used to be, but it's kind of hyper deflationary. Like it increases in value relatively fast, over the long run. So what you can do is basically you pool the assets and you don't even need to reinvest them. Like you could just hold them, and by, for example, if someone invests, I don't know, 0.3 Bitcoin every year, well, then you can calculate based on actuarial tables. Okay, if this person dies in year 1, his family is maybe going to get 30 Bitcoin. If he dies in year 5, they'll get 20 Bitcoin. If he dies in year 20, they're going to get 7 Bitcoin. If he dies at age 80, they're not going to get anything because that's how life insurance works. Because like all the way at the end, you barely get anything because you had a productive working life, which was your plan A to begin with. Like life insurance is only there for, if you have to go to plan B where a crisis happens, family needs to be taken care of. So yeah, I mean, I do think that because life insurance is a pretty predictable business, and that the coins will be held for a long time. I think we'll see various models, and certain life insurance companies will, especially in the beginning, like in this early age that we're at, will reinvest the Bitcoin, try to find like a low risk way to earn 2-3% a year on those Bitcoin, denominated in Bitcoin, of course, to kind of spice up the returns, but also especially to stay legally compliant. Because weirdly, in this fiat world that we live in, there seems to be mandates. Like you're obliged to chase a return for your clients. And in many places, you're also obliged to diversify your pool of assets, which of course goes against a pure Bitcoin life insurance company. But so those things are going to have to be ironed out. Like maybe the first of them are going to be very offshore type companies. But yeah, like very exciting way to think about how, not just like Bitcoin Citadel, not just like, oh, I'm a hodler, but like how does a society on a Bitcoin standard, how does that look like, where we don't have government welfare, where we don't have endless fiat? How do we get that security? And then of course, if you think about inheritance, that's also where that comes into play. It's part of why life insurance is actually still popular today, is that it's one of the few ways to pass on wealth to the next generation, without incurring a very significant tax event. Because the payout of the life insurance, like the government looks really bad if it starts taxing widows, right? Or orphans. So in that sense, you have this like moral protection shield, for the next generation.
Interesting. And one other area that might be required before this kind of Bitcoin life insurance could be realized, would we need to see more stability in Bitcoin's price, right? Because for now, we're very early in Bitcoin's adoption. Depending on how you count it, it's probably, in terms of hardcore people who really are hardcore about hodling Bitcoin or hold a serious amount of their net worth in Bitcoin, it's probably less than 1% globally. And so there's a long way to go before we get any level of stability. So are you foreseeing then that this would be post majority adoption? Like, would we need more than 20%, 50% adoption before this is a reality?
If I were to be a life insurance promoter right now, Bitcoin life insurance promoter, I would say no. You want to start your policy now because you get to add more Bitcoin to your cash balance. You get to more Bitcoin, add more Bitcoin to your bottom line thanks to the volatility, because you're DCAing. Like your policy is probably going to be expressed in dollars, because your income is expressed usually in dollars. And so then when you want that volatility so that in the bear market, you're actually adding a lot to the bottom line of your insurance policy. So of course, probably if you're thinking about adoption, we're going to see more adoption the more generally accepted Bitcoin is. But from a purely selfish point of view, you would want to get your policy today rather than 5 or 10 years from now.
Right. I was speaking more at the insurer level, being able to provide that, because if Bitcoin is so volatile, how do they, give you that? Their tables, their payout promises are going to be expressed in Bitcoin, and so they're not affected by the Bitcoin price at all. The only thing is, of course, that if you get paid out during a bear market, the value of your payout is going to be low, and so that means it is what it is. And maybe you'll spend some of it right away and you hodl the rest till later. But it's just part of the volatility of Bitcoin, but it's not the problem of the insurance company. Right. Because you're saying they would pre-calculate these things
in Bitcoin terms,
do their actuarial tables all upfront or in advance.
And they would never promise more than they can afford to spend, because it's really quite amazing if you study the science of this. Like the death is quite understood as far as a statistical phenomenon. It's quite, especially of course if you only have 10 people in your pool, then not. But if you start having 1,000, 10,000 people, it starts to become you can do a survey and kind of like look at some health factors and pretty accurately predict what's going to happen, and keep a little buffer, because you need to have some profit for the company, of course.
Right. So let's come back to some of the psychology questions. I think this is an interesting one. You've talked about this idea that there'll be people who hate buy Bitcoin, or even that some government officials may have to hate approve, quote unquote, Bitcoin products, whether that's a Bitcoin ETF or others. So can you talk us through this psychology? Why would people hate buy Bitcoin?
Yeah, right. Yeah. Well, basically, Bitcoin is better technology. It's getting adopted eventually by the whole world. The early adopters, most of them are libertarians. They're people who believe in property rights, private property rights, who believe in small government, who believe in the right to privacy. And so that is quite, their values are in line with the technology. But there's also people who, I guess, first of all, who have financial interests in the old system. That's the kind of classical explanation, is like you're cantillionaire, you benefit from all this cheap credit. That's why you speak the way you're fed. But then additionally, there's lots and lots of people who just have political beliefs that are such that make them believe that property is bad, that it's something bad for society, that we need a big government, that weak people need to be taken care of, and that doesn't happen in a society where there's free markets. And so to them, Bitcoin goes against their beliefs, and so it hurts to adopt it. It hurts, like similar to someone who believes that global warming is man-made and it's happening right now and it's a very acute problem, and yet they see themselves buying a gas-powered car. They drive it, they hate buying the car. They don't want to, but they have to. And so people who are no-coiners, who've been avoiding Bitcoin for the last 15 years, have seen their Bitcoin-denominated portfolio wealth plummet, and it keeps on plummeting year after year. And so eventually they're going to be like, look, I got to survive somehow. I hate Bitcoin, but I feel like I have to buy some. And that's when you get these columns in places like The Economist, where they're like, Bitcoin is like a cockroach, and it's people keep trying to kill it, but it keeps coming back. And so basically what they're saying is like, maybe we have to add some cockroaches to our financial portfolio. It's like ugly, but you got to do it. It's just like we don't want to eat the bugs, but you got to do it. So that's how I look at that. And similarly with the regulators, like these are also people of flesh and blood. They have family. Like Christine Lagarde has said publicly that her son owns Bitcoin or crypto. There was an article that was promoted by Gary Gensler just yesterday. It was written by Lori Schock. She's the director of the SEC's Office of Investor Education and Advocacy. And for example, she in the intro of that article writes, which is, of course, it's all padding for the Bitcoin ETFs, I believe. She writes, I can't tell you how many people have come up to me and asked if they should invest in Bitcoin. I recently conducted an investor education program at a retirement community, and a woman said to me, quote, my children keep telling me I need to hurry up and invest in Bitcoin. Is it safe? Have I already missed the boat? So this is the world that these regulators live in. Like Bitcoin is happening all around them, and they're not robots. Like they don't want to be uncool. They don't want to be the one that is the old crocodile that stops innovation when everyone around them is like, hey, when are you going to approve this? What's going on? It's been 10 years that people have been clamoring for a Bitcoin ETF. Like, do you live in the real world? Like, and so they're just feel that pressure, and then they're like, all right, I'm going to approve this thing. Like, I don't want to, but I'm going to do it because I don't want to lose my career. Like, maybe if I keep being the old crocodile, they're going to kick me out and some young buck is going to take my place.
Interesting that it's come this far. And so maybe, as you point out, in the early years, there's career risk of adopting Bitcoin or being pro-Bitcoin. But eventually, once there's been enough of a social shift and a cultural shift, now the career risk is the other way around. There's a career risk if you don't adopt Bitcoin.
Yeah, exactly. And I mean, you could take the analogy of homosexuality. Like in the 50s, you had career risks if you were too friendly to gay people. And then I was rewatching some episodes of Silicon Valley, the comedy, the HBO comedy series, and what they're showing there is like there's actually career risks, in which is obvious that if you are intolerant towards gay people, then you risk your career. So it's kind of like, yeah, society changes, culture changes, and people adapt.
So looking to the future of Bitcoin. One other question I wanted to get to before that one. Why would you say every company needs a Bitcoin strategy?
Oh, every company needs a Bitcoin strategy because every company needs to avoid extinction. And if you are stubborn and you refuse to have a Bitcoin strategy, have Bitcoin on your balance sheet, accept it as a payment, have a Bitcoin related plan for your employees, then you will lose. It's like, I think the way I see it is that cyberspace, like the internet, is kind of like this meteor impact that happened, and it changed everything. Like, the meteor that ended the dinosaur era, it created this giant ash plume. And if you weren't hardened, if you weren't a hard species, which didn't mean you were big and strong, it just meant like you were hard in terms of fit to survive this challenge, you were going to die. You were going to get extinct. And that's why these little mammals who were able to hide in little holes, who were ignored up to then, very small part of the world, they were able to survive, and they became the next era, dominating the next eras of archaeology and history, geological time. And so similarly, I mean, luckily, of course, we are adaptable beings, and so you can make a decision to adapt to this meteoric impact of the internet. And so the reason I say cyberspace as being the meteoric impact is that it's impacting so much of our life. AI is posing a lot of threat factors already. Everybody lives online nowadays. Well, if you don't have second factor authentication, you're going to get damaged. You're going to get attacked. Your reputation is going to get tarnished. You're going to lose money. You're going to lose your job. Your company is going to go bankrupt because the databases have leaked, etc. And so you need to start adopting these cypherpunk tools to survive. And that includes Bitcoin. Bitcoin is just part of the toolbox to survive in an era where DDoS attacks are happening all around us, and where proving your identity is getting harder and harder. So cryptography, really, that's where it's at, and the only money that's really protected by cryptography is Bitcoin. I don't know. It's a very kind of esoteric explanation as to why you need to have Bitcoin on your balance sheet or switch to the Bitcoin standard as a company. But ultimately, yeah, it's to avoid extinction.
When it comes to the future of Bitcoin over this, let's say, cycle or so, let's say the next few years, do you have any, I guess, thoughts on what kind of domino effects we may see? That, we may see this US ETF get approved, and then we may see ETFs in other countries, and we may see more and more companies who start doing a MicroStrategy, or other countries who start doing an El Salvador. I'm curious if you have any thoughts around what kind of dominoes could fall in the next cycle.
Yeah, man, all of them. I mean, it's like the wildfire has started, and let's speculate on where it's going to spread, and it kind of depends on the wind and some factors that we don't control. Also, we don't know how hollow and rotten all the trees are and how fast they're going to catch fire. So there's a lot of unknowns there. I do feel certain that it is happening, and of course, like a Malay revolution, that could just start spreading all around the world too, because I do really sincerely believe that Bitcoin is a part of all this kind of counter movement, this countercultural movement for smaller government, more responsibility, longer term thinking. I think there was an undercurrent of that, but a lot of those people are feeling emboldened now because they have written about this in the Bitcoin Reformation. If you have an exit strategy, if you have the option to actually exit, you start feeling more free and you speak more freely. And I think that's what we're seeing is Bitcoin is kind of this I don't know, super fuel for change in the world. So yeah, it's all tied together. It's not just Bitcoin that's spreading. It's all tied together. I don't know where the next. It might be a central bank that puts it on their balance sheet. I think generally speaking, you can say that people who are already more freedom-minded are going to be earlier adopters. So maybe entrepreneurs are more likely to be part of the next wave than stodgy old government bureaucrats. So just exciting times. And like we said, it's just very early in this bull market.
One other area around the future of Bitcoin use, because obviously not everybody can transact on-chain, right? Everybody's clear about that. And it may not even be possible that everybody can have their own Lightning channel, at least today. Maybe with future technology, it may become possible. But I'm curious how you're thinking about some of these alternative ways that people are interacting with Bitcoin or looking at it. So, for example, there's Liquid, which is a federated sidechain. You can think of it kind of like a custodian but spread across the 15 functionaries. There's eCash, and there's kind of the single eCash form and the federated eCash form. And there's just straight up custodial Lightning as an example. I'm curious how you're looking at some of these methods of Bitcoin use, and what do you see becoming prominent?
Yeah. Well, first of all, I want to see all of them kind of grow and proliferate, and of course we're all going to have debates on which one offers the best trade-off for security versus privacy, etc. They're all going to have different trade-offs. That's a fact. The level of security that you can achieve with a proof of work based blockchain that's globally adopted is unprecedented, but the bandwidth that offers is limited by definition. I think Greg Maxwell puts it really well when he says it's like a court system, and the Bitcoin blockchain is the supreme court. It's the smartest, it's the most fair of all courts, but it's also the most expensive place to settle a dispute. And so these layer twos are going to be lower level court systems that work in a different way. And so it's polycentric law at work. It's really beautiful if you look at it that way. So that's how I see this entire discussion. It's like you don't want, as much as I'm a maximalist for Bitcoin, right? For Bitcoin adoption, we only need one Bitcoin standard. I'm very much a pluralist when it comes to the layer twos. I think we need many systems, and we need competition, and we need arbitrage between them, and money to flow from one to the other. I've been vocal for years that I think the liquid sidechain was undervalued and underappreciated. People were saying like, oh, nobody's using it, and it's there's not enough hackathons, and it's too cumbersome. There were all kinds of, not enough smart contracts, all kinds of things people were saying. And my feeling was that this is something that is designed to flourish when fees are really high. And there was another reason. Well, maybe also when privacy is really valued, much more valued than before. And so like an Ethereum is very bad for privacy, for example, but people didn't care, and so they would use it anyway. And then the Bitcoin blockchain for a long time had low fees, and so people were like, oh, everyone is going to go on Lightning. It's the future. We can all open Lightning channels. And then it's like, oh, really? Like 8 billion people are going to open Lightning channels on the mainnet? I feel like finally Liquid is getting the attention it deserves. It's a very powerful platform, but it's not the panacea. It's not going to solve everything. There's also the ARC proposal I've heard of. Alex Bergalex was excited about that. And who knows? Maybe this is still very early age, layer 2. Like we've been thinking that we solved it all, but maybe there's more to it. And people are saying that, maybe Lightning will have a different role in this ecosystem than we previously thought.
Right. And I think the Lightning part is a different understanding than in the earlier days of Lightning, where maybe the common understanding was just, everyone can run their own node. Whereas now, I think the use for Lightning is being better understood, and, maybe some of us were wrong, right? Like I think I had the wrong impression, that I think it's going to be more used in a B2B context. And although, of course, I want as many people to be non-custodial as possible, I also accept that there will be a lot of custodial Lightning users. And, I can't, shaking my fists at the stars is not going to change that. That there will be a lot of people who simply cannot afford to go on-chain, and so they will use some kind of custodial solution, whether that's custodial Lightning, and Lightning may become more like this kind of interoperative layer or interconnective tissue between the different layers, whether that's people on Arc, people using eCash and Fedimint sort of things, and people using Liquid, and people on and just people natively using Lightning. And there may be these kind of swap providers who help you kind of swap between the different solutions. Maybe that's what the future looks like.
Yeah, I mean, that's what I think. Yeah, that's what I think.
All right, well, I think that's probably a good spot to finish up. Any closing thoughts, Tuur, and where can people find you online?
Closing thoughts. I mean, strap on your seatbelt. Like this thing is going to light our hair on fire. This thing is gonna go. I really think we're so early. Nobody's interested in Bitcoin yet. If you look at the search trends, it's like, no, the world is not paying attention yet. The world needs this. It's crazy to me how all these global macro factors are starting to come together. Like you were talking about the deficit, for example. I mean, Jeff Gundlach had a slide in his deck where they made some projections for U.S. government, how sustainable their expenditures are. And basically, if the interest rates goes to 9%, they're literally bankrupt by 2029. That means that interest rate payments would grow larger than 100% of tax income. And also, if it stays where it is right now at 6%, they also go bankrupt quite quickly. And the alternative, of course, is to lower the interest rates, which means you blow up the value of the money. So it's just, just so many crazy things that are happening at the same time. And I'm so happy that Bitcoin exists, because truly, like, a lot of us who've been looking at this for 15, 20 years, we were thinking about digging a hole with a bunch of gold and like just waiting for the zombie apocalypse, because it's just so terrible to have a financial system that all of a sudden can no longer calculate, and where the money is dead, that it is terrifying. And so for Bitcoin to build this alternative, it's like we're building a system B or a system D, like se débrouiller. It's like to get by, a way for the world to actually get by and get through this crisis. Like we see stories about this all the time in like war zones and things like that today, that they're like, if it wasn't for Bitcoin, I couldn't have sent money to my family to get them out, etc. So it's a lifeline. It's a lifeline, and of course it's the future, right? And it's already here. Like the Renaissance has already started. And oh man, I'm so excited. It's amazing to live in this exact era.
Well, great to chat with you, Tuur. Listeners, make sure you follow Tuur. I'll put all his links in the show notes. Yeah, look, I agree with you. I think we're living through this renaissance. It's a new era. And so strap in. Hey, looking forward to chatting again with you soon. Thanks for joining me.
You're right. See ya.